welcome to SMC trading course. Hope you all doing great. In this video I'm going to cover liquidity. So what is liquidity? Liquidity are the areas where most retail traders place their limit orders or stop losses so that it becomes easy for the smart money to grab the money. So what is liquidity? When you see this level of support or resistance in this level of resistance in the market, what most retail traders do is that when the price reaches this level, they short from this level, but what happens is that it moves up, comes to this unmitigated order block, and then shoots up again. So what happens is that a lot of retail traders' money rests above this level of resistance and below this level of support. And what the smart money does is that it grabs this money, comes to this unmitigated order block, and shoots the price up. So the price moves in accordance with the smart money. Same is the case for trend line. What happens is that when the market is trending, it creates uptrend, this fake uptrend, and next what happens is that the price comes to this unmitigated order block and fakes this trend line and then shoots up. So normally what retail traders see is that there is a trend line here. They buys from this level, putting the stop losses below it, and what happens next is that it comes to this unmitigated order block and then shoots up. So in this video I'm going to cover the liquidity and how the liquidity helps in marking profit levels and how it helps the smart money traders to identify the order blocks and target the order blocks. So coming to liquidity, and there is a very important point that the more liquidity created near the order block, the stronger the order block is. So when you see this order block and more liquidity is created near it, the stronger the order block is. So you might wait for this liquidity to be created. It might take long, but when the liquidity is created and the price hits your order block, it takes less time to reach your take profit levels. So liquidity actually helps the smart money traders a lot. And now coming to the types of liquidities. What are the general forms of liquidities? So as I've already learned that equal tops or equal bottoms are very strong areas where the retail traders place their orders. So when you see these equal tops, what most retail traders do is they mark this as level of resistance, and when the price comes next to this level, they short from this level and thinks that the price will go down. But these levels are strong levels of liquidity or areas of liquidity, and what most smart money traders do is they target this level and sweeps it. So I'm marking just the types of liquidities here, deleting this. So equal tops and equal bottoms are very common forms of liquidity here. So when you see, we generally mark the levels of liquidity with say dollar sign or pound sign, whatever you wish. Generally these are the symbols for liquidity. When you are in a trade and you see this equal top, you can target these equal tops as your profit levels or book partial, because you know that these equal tops will be grabbed and you may target these equal tops. For trend line, what happens is that the price forms a general trend like this, and what most retail traders do is that they see these as levels of support in a trend line, and suddenly what happens is that the price comes to this unmitigated zone here and then the price shoots up. This is the trend line which creates the liquidity. The price comes to this unmitigated zone. We may say that the trend line is a form of liquidity, and whenever you see this trend line, you may think this as liquidity. Same is the case for downtrend. And there is another form of liquidity, which is inducement. So what is inducement? Inducement, you may say, is a retracement, but it did not retrace back to the order block. And you can easily identify this as like this. The price is moving up, comes to this or mitigates this order block here, and then the price moves up again, breaking this structure, confirming that it is a bullish trend. And what happens is that it comes down, but it did not mitigate this order block. So it is a retracement, but the retracement did not touch this order block here, did not fill this imbalance also here, and then shoots up again. And what happens next is that it comes back to fill the imbalance here, mitigate this order block here, and then shoots up again. This is the unmitigated order block, which is mitigated here, and this retracement here is the inducement. I think I have made you clear. Same is the case for downtrend. The price comes down, mitigates this order block here, and then what happens? It causes rapid move to the down. The price retraces back, but did not retrace back to this order block here, did not fill the imbalance here, then comes down. And what happens next is that the price comes back to mitigate this order block here, fill the imbalance here, and then the price shoots down. So this is inducement. Now I will be coming to live examples to show you the types of liquidities and how these liquidities strengthen the order blocks and how it helps the smart money makers to grab the money in the market and make their own money. So coming to the examples now. So now on the stock, you can see that the market is creating higher highs and higher lows, higher highs and higher lows, clearly breaking these structures. This structure here, then this structure, and this is the order block here, which is causing this massive break of structure here, and then retracing back, and again causing massive break of structure here. And here you could clearly see that the market is creating double bottom, and this causes liquidities here, and there is a gap which is to be filled. And next what the market does is it creates rapid move to the up, creating huge amount of imbalances, and again retracing back to this level. And as it retraces back, you could see that the imbalance is filled here. But next what happens is that it creates a trend line liquidity here. What most of the retail traders do is, as they see rejection here, they buy from this level, maybe targeting this level. I'm showing you they might buy from this level, from this strong buy candle here, putting stop loss level below this and targeting maybe this level. But what they did not see is that there is imbalance to be filled and unmitigated order block here, a clean order block here, which is to be mitigated. Next, what the market does next is that it takes support, but what the market does next is that it creates continuous support from this level, and it causes huge amount of liquidities at this point, this point, this point here. And next what the market does is that it grabs all the liquidity, mitigates this order block here, fills this imbalance which is left to be filled here, and then shoots up again, causing massive break of structure to the upside. And as it causes massive break of structure to the upside, it again comes down, causing huge amount of equal lows. So this level of resistance causes huge amount of liquidities here. So as the price breaks this with huge amount of imbalances left over here, and left over here, these imbalances are needed to be filled. As it retraces back, it causes strong level of support here. You can see here, 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 here. And as a smart money trader, you could see that there is an unmitigated order block here. There is imbalance here. The market will fill the imbalance, mitigate this order block, and then shoot up. And this is what happened. So you could clearly see that the market grabbed the liquidity here. There is a lot of money resting below this level of support, grabbed it, and then shoot up. So the liquidities here gives us the confluence, and there are many traders who went long from this level, because there is support here, support here, support here, putting stop losses below it. What the smart money does is that it grabbed the liquidity and then it shot up. Now coming on to the next chart. As you could see, this is the analysis I have already given you. This was an Alchem Lab Limited, and from this point I'm going to analyze the chart. You could see continuous resistance from this level, and this level of resistance causes liquidity as there is huge amount of money resting above it. And what the market does next is that it breaks it with a strong move, causes the resistance here also. So it grabs the liquidity here, and simultaneously it causes break of structure to the upside. And what it does next is it comes down and causes massive break of structure to the upside. And as it causes this break of structure, you can clearly see that there is an order block, there is imbalance here, and as it moved up like this, the price retraced back, but it did not mitigate this order block here, did not fill the imbalance which is left over here, which is left here, and a bit here. It shot up. This level is the level of inducement, you may say. What many retail traders did is that as they saw that the price breaking this level of consolidation, many went long, putting stop losses below this level. And what the smart money traders do is that they target these stop losses. And what the market does next is that the market comes down, mitigate this order block, fills all the imbalances which is left over here, and then shot up again. And as it shot up, you could see that there is equal highs or double tops, and the market is going to liquidate all these double tops here. As the price broke this minor structure here, and the major structure here, you could clearly say that this is an uptrend, and this is going to liquidate all the double tops here. Double top here acts as a take profit level for your trade. So this is what I've already told you in the past, that how these double tops can help you get the proper take profit levels. When you see that this is the double top, and many of the retail traders are going to put the stop losses below it to go short, you can easily target these double top levels because the market is going to liquidate these double tops here. So this is one order block here, and this is another order block here, and this order block has lot of imbalances which is to be filled, and this order block to be mitigated. So you may say that this is a high probability order block, and as the price moved up, consolidated a bit, you can clearly see that the market has created a trend line here. So there is liquidity here, and you know that since there is imbalance here and order block to be mitigated, this trend line will act as a liquidity, and the price will retrace back to fill the imbalance, mitigate the order block, and hit our take profit levels. And this is what has happened. Clearly see, this is a, you must say, 1:5.8 risk reward ratio trade, and I've already shared this. Next, coming to another stock. Here you could see that the price has broken simultaneous structures. Here, this has broken this high, and as it broke this high with an impulsive move up, it has created imbalance, a huge amount of imbalance here, and this has created simultaneous imbalance up here. And as it moved up, it mitigated this order block because there is imbalance to be filled, order block to be mitigated here. And as it mitigated this order block, it caused a massive move up to the upside, causing breakout structure to the upside. And as it broke structure, there is a huge amount of imbalance which is left to be filled, and it retraced back, but it did not retrace back to this order block and did not mitigate this order block. So this is what I've already told you is the inducement here. This is the inducement here, and this inducement, and many of the retail traders have bought at this level, and what it does next is that it liquidates this inducement here, comes back to the order block left over here, and then shoots up. And this is what has happened on Jindal Steel and PWR. Next we come to Bajaj Auto, and I've already shared this trade with you. You could clearly see that the market causes this minor breakout structure here, this major breakout structure here, and the breakout structure with even gaps, huge amount of gaps here. And what the market does next is that it causes impulsive move to the upside. And as a smart money trader, what you see is that there is a trend line here. So you mark this as trend line liquidity. And what the market does next is that it fills the imbalance here, mitigates this order block, and as a smart money trader, you put a long position here, putting stop loss just below the order block, and maybe targeting this high. And this works out perfectly. But as you go to higher time frame, you could see that there is double top up here, and the price is going to come up to liquidate the double top up here, and it is what has happened. So if you're going to hold it for long, you could have targeted this level. It would be a fine 1:9.5 trade. But if you're going to hold it short, you could target this level, which I've already shared, and it has easily hit our take profit levels up here. Next we come to Jindal Steel and PWR. What the price did is that it caused simultaneous breakout structure here. The price retraced back, filled this imbalance which is here, and mitigated this order block, and then caused the breakout structure to the upside. And as it caused the breakout structure, there is still imbalance which is left to be filled, and there is an order block which is left to be mitigated. The price retraced back, but it did not fill the total imbalance and did not retrace back to the order block. There are many retail traders who are going to buy at this point and targeting this high, you may say. But what the price did next is that it liquidated the buyers here, came back to the order block here, and then shoot up. So what I did is that I booked most of my position at this level because there is liquidity up here. You can see there is liquidity up here, clear amount of liquidity. So what I did is that I booked most of my position at this level because the price is going to come back to this level, and that there is high probability that the price liquidates this double top here and moves to this take profit level up here. And you can see there is still wicks here, so there is high chance that the price is going to liquidate the wicks here. And this is how the double tops or double bottoms or the liquidity areas help you getting the take profit levels in your trading. Next we come to Jyoti Lab and Limited, and you could see that the price caused simultaneous breakout structure to the upside, and as it broke this structure up here, there is imbalance which is left to be filled up here, slight amount of imbalance here. It filled this imbalance up here, and this is the inducement which I have taught you. It retraced back, but it did not retrace back to this order block here and did not fill the imbalance up here. So what the price did next is that it caused breakout structure, again came back, moved up, but did not close above this high, and you could clearly see that there is double top up here. And what the price did is that it swept the liquidity, and then it retraced back to this order block. And here you could also see that there is wick up here, and it is causing the double top up here again. So this is the liquidity here, and there is high chance that the price is going to liquidate this double top up here and move to the take profit levels here. So this is the end of liquidity session. Now moving on to the next session.